Hello, hello, hello. What's going on, everybody? Welcome to a Capital Hungry Market Update and Trade Ideas webinar today, August 22nd. Can you guys hear me loud and clear in the YouTube audience? No sound? Or you guys can hear me now, right? There's no sound with the intros anymore because it always used to get copyright claimed. Every little freaking sound I used. So yeah, as long as you guys can hear me now, we're all good to go. Everything's good. Okay? Okay, so before we jump into the analysis today, let's all give each other a round of applause and pat on the back if you've been following the Capital Hungry analysis over the last weeks and you took advantage of the gold sells 1800s all the way down into the 1730s, dollar strength back into its highs at 109s, GU sells and EURUSD sells. Everybody in the chat, spam a 1 if you've been able to take advantage of these trade calls and analysis following the Capital Hungry Market Update webinars. Huge gold sells, GBPUSD sells, EURUSD sells, playing dollar index buys, and understanding what's going on in the markets fundamentally and technically. Let's get the energy up for today's market update webinar, shall we? Okay? So the reason I want everybody to get their energy up and understand what's going on is because we are still looking to extend that same sentiment of playing dollar strength, Japanese yen weakness, starting to understand and see the exhaustion of buyers in the stock market and potential sellers coming back into scene as we have the main macro information advantage of more rate hikes by the Federal Reserve being priced in by the market. So the main reason we're seeing why dollar is so bullish is the market pricing in more Fed rate hikes. This is also the same reason why gold, equities, and other asset classes such as oil are so bearish as well over about the last couple of weeks, right? We can also see that Japanese yen individually is still bearish as the Bank of Japan is keeping their monetary policy relatively loose and still looking to keep interest rates in the negative and keep their unlimited bond buying program active. The main focus for us this week to see if we can continue to play US dollar strength as well as gold bears and sells on GU or pairs like EURUSD is going to be Jerome Powell when he testifies in front of Congress at the Jackson Hole Symposium. He's going to be talking about monetary policy. He's going to be discussing and giving signals of what's to come for the September FOMC. And if everything is in line with expectations from their previous FOMCs and what Fed speakers have said over the last couple of weeks, a 75 basis point rate hike is still on the table. They're still going to be aggressive with rate hikes to come. They're going to keep interest rates high for an extended period of time, and that period of time can potentially be 18 months that interest rates are still going to increase and be kept at that level, which all of this is very bearish for the stock market, is very bearish for asset classes such as gold, the real estate market, oil, and so forth, but it's very bullish for the US dollar. So we can use this information advantage to our advantage in the markets alongside the price action and technicals as well as understanding market structure, where as long as this sentiment stays as is, we can play dollar strength effectively, gold sells, stock market sells, and so forth. So because of the Fed speakers over the last couple of weeks, ever since we had dollar retest previous highs at 105.5, GBPUSD retest previous higher time frame lows, EURUSD retest previous higher time frame lows, and gold retest 1800 sell side liquidity zone, what we have had happen over the last couple of weeks is, of course, more Federal Reserve speakers come into play, such as Fed George, Fed Kashkari, Fed Bullard, and others that have still pushed the sentiment of inflation being way too high and high risk, needing to do more with bringing rates up and keeping rates up for an extended period of time, still having to be aggressive with their rate hike cycle and bringing more hawkish remarks to the table. This is what led to US 30 rejecting 34,200 sell side liquidity zone, and also led to the massive rejection on gold at 1800s and dollar turning bullish above 105s, heading back into its highs. So you can see across the board here, dollar is still very bullish on the higher time frames, and what we were explaining in previous market update webinars was that we were just having a short-lived pullback phase to revisit previous highs, and if we double bottom in this area and get more hawkish remarks from Fed speakers, as well as economic data that supports more rate hikes by the Feds to come for the September FOMC in an aggressive fashion, that we can see dollar buys back up to these highs. This was a beautiful move that has played out over the last couple of weeks here, from retesting 105 and continuing back up to its highs. This move of the dollar domination with the market pricing in more aggressive rate hike signals for September FOMC obviously led to GBPUSD downside, as we had GU retest previous lows and double top as a sell side liquidity zone, now coming to its higher time frame lows, being the inverse of the dollar, as the US dollar is your world reserve currency and business currency. And you can see EURUSD also did the same thing. A bit of a double top retest at previous lows and still maintaining bearish market structure, right? And we can also see on the higher time frames, gold did the same thing with retesting previous significant higher time frame lows at the 1800s before turning more bearish now, potentially coming back into the 1700s and 1680s. Now, we still want to continue to play our bearish bias on gold, our bearish bias on GBPUSD, our bearish bias on EURUSD, bullish bias on USDCAD, and of course bullish bias on dollar index individually, and potentially further bears jumping into the market on US 30, as we're seeing this deeper bear market rally starting to fade out and higher time frame bearish structure still being respected, which I'll discuss when we do our individual US 30 analysis. But for us to see any more continued downside on gold or continued downside on dollar pairs, we will need dollar index individually trading well above its previous highs, having maybe a short-lived pullback or starting to dig into the 110s. If I see dollar individually seeing some more upside from a technical perspective, what this shows me is that there's more buyer order flow entering the market, because what is holding the most weight from a fundamental perspective is more rate hike signals for the September FOMC meeting, and that getting priced in well before the actual September FOMC meeting, right? That shows me that overnight or over the next couple of sessions, before we have Jackson Hole symposium take place with Jerome Powell on the Thursday and Friday, that we can see continued upside into the 110s and 111s when you're looking at dollar movement on the intraday, and that shows market further pricing in more rate hikes to come. This will correlate to a more aggressive downside move on US 30, more sells on GBPUSD below these lows, EURUSD breaking below these lows, and higher probability of gold trading back below 1730s, starting to head back down into the 1700s. So on gold, GBPUSD, EURUSD, US stock market index, I still want to stick to our higher time frame bearish bias, right? GBPUSD, you see the same thing, higher time frame bearish bias. EURUSD, same thing. On dollar, obviously we're playing the bulls, so on USDCAD we're looking for more buys. I want to play more sells on US 30 stock market index, with the market fading out that delusional optimism and the reality of more rate hikes and rates staying high, holding a bit more weight with dollar domination. And then we'll talk about GJ individually, where GJ on the higher time frames is still very bullish, but just has been ranging. Okay, so now hopefully that summary of fundamentals and what's been going on in the higher time frame makes sense to everyone. Now we just want to look at what fundamental events we have and then dive into individual technical and fundamental analysis on these pairs. In terms of economic events on the docket tomorrow, overnight through the Euro in London session and into the North American trading session, we do have important figures on the docket, which is our PMI figures. At 3:15 a.m. Eastern, 3:30, 4 a.m. Eastern, and 4:30, we have France, Germany, Eurozone, and UK PMI figures from the composite manufacturing and services sector. All of these PMI figures are expected to be very weak. If these PMI figures are below prior and below forecast, this could be reasoning for short-term upside on gold to create a pullback from these intraday lows before continuing overall bearish on the higher time frames. And then also through our North American trading session from 9:45 a.m. Eastern, we have manufacturing services and composite PMI for the US. If this data is poor and not showing any signs of improvement, it will lead to short-term weakness on the dollar and a pullback from these highs and short-term upside on gold. What we would want to continue the US dollar strength bias and gold bears would be more optimistic and improved data with the US PMI figures tomorrow, where the forecasts are relatively expecting mixed figures. We also have a consumer confidence report still expected to be record low and in the negatives for Euro, and we have new home sales at 10 a.m. Eastern for the US as well, which won't really have too much of an impact as the real estate sector and housing sector in the US, with interest rates going up, has obviously been cooling down and seeing a correction. UK PMI is expected to be weaker. If UK PMI is below prior and below forecast, which is expected, that can still keep GBPUSD bearish and also keep GJ ranging on the higher time frames a bit more bearish, as we both have a tug of war on GBPJPY. We have both Japanese yen weakness, the same time GBP is short-term weaker as well at the current moment. Besides economic events, in terms of central banker and political activities tomorrow, right, we do want to keep an eye out that during the North American trading session tomorrow, we have the Philly non-manufacturing business outlook report, and we also have Kashkari in a Q&A session later in the North American trading session. US 30, I trade US 30 instead of NASDAQ just from personal preference of that was one of the first equity markets I started trading when I first got into learning about trading. NASDAQ, US 30, S&P 500 all move in very similar fashion, following the monetary policy of the Feds and of course that market psychology. So it doesn't make too much of a difference of which one you decide to choose, as it all has similar market structure, fundamental impacting factors, and especially of current fundamentals that's impacting it. Okay, so gold. Gold on the higher time frames has of course been bearish as the market has been pricing in an aggressive rate hike cycle by the Feds. This has led to sellers consistently printing lower lows and having aggressive downside movement and only having short-lived pullback phases to retest more favorable sell-side liquidity zones before still continuing down overall bearish. What we had take place from the 1680s monthly institutional zone on gold here was nothing more than a lot of the fundamentals at that period of time being priced in and seeing a pullback phase. We expected this pullback phase specifically to retest previous higher time frame lows in the 1800s, where if we started to notice dollar buyers coming back into the scene, as well as similar types of rejection confirms of buyers exhausting out, we were going to start to look for sells on the 1800s, scaling back down to revisit the lows and potentially even digging lower. We still have ranges to visit into the 1680s and 1700s. The only thing we have to be mindful about is as we have some of this bearish market structure forming on gold, you can see it is very common on the intraday timeframes that if you have any short-lived market fear, you can have these aggressive pullback plays that take place as you overall still make your way to the downside. If we have very poor economic data overnight, that could be reasoning for short-lived gold pullbacks before continuing down. Otherwise, we need breaks below continued 1730s to see the sells on gold. So to summarize, higher time frame bearish structure, still respecting previous low sell side liquidity zone, still have higher time frame low targets of the 1680s. US dollar strength is still very evident. Intraday bearish price action and market structure, of course, forming. Market pricing in more rate hike signals to come by the Feds. Just have to be mindful of expected weak data overnight that can create a pullback. And of course, some of the Fed speakers tomorrow and Jerome Powell at Jackson Hole this week. Overall, even if we have bad economic data or any short-term fear, I'm just expecting that to create short-lived pullback phases, which is very, very common as gold makes its way to the downside and still ending up fading out those moves and continuing bearish into the 1680s. Does that market structure and order flow analysis make sense to everybody on gold, as well as the fundamental reasoning for this movement? If it does, I'm going to dive even deeper now into the intraday time frames so we can dive into the price action and market structure for trade ideas to come, right? So this is what I've been looking at zooming in now. On the intraday time frames, you can see below the key levels, we have this stronger bearish market structure forming. What I'm trying to explain is, if we break above the 1740s, it wouldn't be out of the ordinary for gold to give pullbacks to the 1748s, 1750s before still seeing continued sells to the downside. You can see in this current sequence of events, as we had this double top and sell side liquidity generated from previous higher time frame highs, we started to print new lows. We had a break below this support zone turned into a resistance, and since then we've had sellers printing consecutive lower lows and very, very short-lived pullback phases to generate more sell side liquidity before continuing lower. As we're looking at this broad bearish market structure forming, seeing a pullback phase if we break above the 1740s here into the 1750s before sell-off would not be out of the ordinary when you're looking at the overall bearish market structure and price action forming. So bringing that information together to the and besides the trend line, right? Whenever I draw a trend line, that's not a make or break highlight of market structure. Market structure is based on price points of interest. When I'm looking at gold here and understanding gold behavior, we've had and you're looking at its overall movement, you can see we've had very aggressive downside with very minimal pullbacks. Even this aggressive upside here, you can see there was multiple daily periods where you have consolidations or pullbacks as you make your way to the upside. This downside has been straight melt. Very, very minimal pullbacks. I'm not saying a gold pullback has to take place, but when it does take place, if it's a bit aggressive compared to the downside moves, it still wouldn't be breaking overall bearish market structure if you see a one-off daily bullish candle to still make your way to the downside. Let me give you an example. Look at this downside that we had here after sellers peaked these highs. You broke below this support zone, and look at this downside. Very, very aggressive downside, very clean bearish market structure and movement, right? But as you make your way to the downside, this is the daily chart, you have these couple of day periods where gold could just be in pullback structure or doing a pullback on the intraday time frames, right? That doesn't break structure even though you can get these aggressive pullback phases. So all I'm trying to say is, if we start to anticipate any bit of exhaustion on the intraday time frames, seeing a bit of gold pullback before making our way to the downside wouldn't be out of the ordinary at all. You can see the same thing with the movement here as you made your way to the downside, and you can see the same thing here. Does that make sense to everybody? Now, obviously for us, it would just be the easiest if we just have continued break below these lows and a straight melt down to 1680s. that would be the best opportunity, but we don't want to look at the most optimistic side. We want to have realistic views. And in my opinion, if we see gold do a pullback to like 1750s, it wouldn't be breaking the bearish structure or bearish price action, and we still have a lot of ways down back into the 1680s. So when I'm looking at gold here, on the intraday timeframes, I would see short-term pullback buys only if we break above 1740s. Remember, short-term pullback buys. Not looking for buys to the 1900s, not buying all the way back to the highs, not buying to the moon. Potential short-term buys to retest previous intraday lows in bearish market structure before jumping back into higher time frame sells. Otherwise, just rejecting here and breaking below the gray zone or breaking below 1730s is just continued gold sells. Green box being the pullback buy area, short-lived counter trend trade, red boxes being the sell zones. Does that make sense to everybody? Just to be mindful that if we see a gold pullback occur. Now, when you're looking at order flow movement through the markets and correlations, you're going to have a higher probability of a gold pullback above the 1740s if you also don't see dollar instantly breaking above its previous highs. If you see GBPUSD having a bounce at its lows, EURUSD having a bit of a bounce from its lows, dollar showing a bit of exhaustion from these highs, you're going to have a higher probability with how order flow is moving, telling you that the events so far have been priced in, where you can see sellers exit positions and buy side liquidity generated, creating that pullback phase before continuing back down. Does that make sense to everybody in the chat? Hopefully that's very in-depth, informational, and educational when you're going to bring all this information together. Does that make sense for gold before I go on to the other dollar pairs? Adam, you're saying no, but you don't even know what time frame we're looking at when there's literally watermarks of the time frame. You're just stupid, Adam Paul. Your IQ's too low for this. You need to go study and read a bit. You need to go get your eyes tested just to see what time frame it is first, my friend. Once you can figure out how to see what time frame it is on a chart, then you can jump in after and learn about everything else. All right? Okay, now, before we do GJ, I want to go through the dollar pairs as well as the stock market index too. Okay? And also, one more thing to highlight here on gold. Gold can really even do pullbacks all the way to the 1760s, this previous broken support, and still be very bearish on the higher time frames. So just something to keep in mind and focus on and understand there. But overall, that main analysis is what I gave you guys so far, and what I'm focusing on is this intraday structure so far. That's still being respected for the time being. Okay? Now, when we're looking at dollar pairs, GBPUSD and EURUSD, it's very easy to understand the correlation alongside the dollar, right? US dollar is your world reserve currency and business currency. It holds the most weight on a global scale. And of course, you have more signals of Fed rate hikes to come. If dollar continues for this next daily candle just to do a bit of a pullback phase and continues to trade above these highs at 108 and 108.8 and 109, right? If dollar continues this pathway of price and doesn't break back below 108.5 and doesn't cancel out this intraday bearish, a bullish engulfing candle, right? Then we have a lot of expectations of dollar bulls to continue into new highs, which will correlate effectively to EURUSD breaking into new lows and GBPUSD breaking into new lows. No, I am not Raja's student. I was just a member of Forex family before. I am a student of the markets. I was under Uncle Ted before when I joined Forex family. I just learned a lot during the same years of Ted and Raja when they were all studying the markets, but I learned a lot at the start from Uncle Ted and the Forex family. Besides the Forex family, I've never been in other trading group besides all the study I did in starting Capital Hungry. I was never in Raja's market fluidity or anything. We're all just very close friends in real life and colleagues in business, trading, psychology, life, fun. You know what I mean? Manhood. We have a secret cult, me, Raja, Ted, and a couple of other of us. Okay, so anyways, so now, listen everybody. This is what you have to understand looking at dollar correlation for the next daily period, right? As well as what's going on with dollar pairs. If dollar does not cancel out this bullish engulfing move, and for the next daily candle just does a bit of a pullback and continues bullish trading above these highs, this is going to give you very easy continuation sells on EURUSD and very easy continuation sells on GU. Otherwise, if dollar cancels out this move and does a double top in this area, we're going to see deeper pullback phases before continuing bullish. Let me zoom out and give you examples of dollar movement and on the other pairs. Okay, look at this. When you're looking at the structure of dollar as your world reserve currency and to use that correlation effectively, you can see there's many times when highs are revisited and you don't instantly break above those highs. You create a bit of a consolidation zone. You have some deeper pullback plays before continuing more bullish, right? So this is the same question now we have to ask ourselves here. Based on price action is going to tell us, oh, let me move my charts. It's in the way here, right? So this is the same question we have to ask ourselves here. As we're seeing dollar approach its intraday highs again, do we have enough volume and volatility, or is the fundamental information advantage holding enough weight where we're going to have the instantaneous breakout and dollar buyers just continue higher, right? Because what we want to see to continue our bias of GU sells, EURUSD sells, have more confirmations of gold bears below 1730s, more confirmations of stock market bears and VIX bouncing from its support, is dollar just continuing to break above these highs, possibly retest and continue bullish. But as you can see, we are at a very key price point of interest, where if we don't instantly break and you get price action rejection signs, we could easily see a bit of a deeper pullback phase before continuing bullish. Does that make sense for everybody when you're looking at dollar index there? Does that make sense in terms of market structure, how this trading instrument behaves, how you don't always instantly break out into new highs, how we have to be very vigilant watching dollar movement at these previous highs? This was a great move that we called ahead of time of dollar retest of previous highs and going up to 109. But now to see any more dollar upside, we have to be trading above 109. Right? So we have to keep that in mind. Right now, the price action is very bullish, where what would be ideal is just getting a minor pullback for the new daily candle and just continuing bullish as well. This is going to correlate effectively to very easy continued GBPUSD sells and very easy continued EURUSD sells. So when I'm looking at GBPUSD, if we reject this order block and still come below sells, break below current low sells at 1.1748, this is if dollar continues more bullish, we have weaker UK economic data, and still respect this sell side liquidity zone. I would only be looking for any GU buys or pullbacks with clean breaks above 1.1845, where then I could see short-term pullback buys to retest better sell zones. But that's only going to take place if we see dollar rejecting its previous highs, as explained with that correlation factor. What that shows me is sellers exiting positions on these lower lows when we're looking at GBPUSD, a potential pullback phase that can occur, pushing us to better sell zones before continuing down. Otherwise, I'm looking for mainly this, with only short-term pullback buys above 1.185 to better sell zones. And this is going to be a very similar sequence of events of what we are looking at on Euro USD as well. With Euro USD, we can see much cleaner structure where at least Euro USD with individual Euro weakness and the major difference between ECB and Federal Reserve's interest rate, where I'd be looking for a retest of this structure in previous lows on Euro USD sells, just hold of the key level and breaks below 0.99 sells on Euro USD. Only buys on Euro USD above 1.05005. So keep in mind dollar correlation, keep in mind the economic events we have overnight, keep in mind the Fed speakers tomorrow and Jay Powell with the symposium towards the end of the week. USDCAD, we're more in the inverse. On USDCAD, we're starting to see stronger bullish structure forming as dollar is bullish and the Canadian dollar is weaker on oil being more bearish. Less demand in the Canadian dollar with that correlation. Pullbacks to 298, holds of this current zone and breaks above 316, I would still be looking for USD CAD buys. I personally trade gold in GJ. If you go to my Telegram or if you go to Twitter or Instagram, you can see like 500 pip gold sells I personally took advantage of, where I gave everybody those trade ideas ahead of time for free. And in the Capital Hungry private channel, they had updates for those gold sells every single New York session, every single London session, every single market update webinar. We still have Capital Hungry members holding gold sells as well. I just do analysis across pairs as I have a good fundamental understanding. I like to understand what's going on in the markets as a whole, as it gives me a lot of information to work with. It gives me a lot of data points to collect, and I can see market sentiment and how order flow is moving accordingly through the market as one. You know what I mean? Now, US 30, all of my levels and areas got deleted, but what we saw take place was, of course, a short-term pullback phase and bear market rally to revisit previous key sell-side liquidity zone at 34K and 34,200. Overall, you can see we're still respecting bearish trend and bearish structure. This upside move still came from a new low being printed on the higher time frames. Dollar strength is starting to come back into the table. More hawkish remarks from the Federal Reserve. And you can see the buyers starting to fade out as volatility index is also holding this support at this 18 point and 20 handle, starting to turn more bullish. And of course, global equity markets are starting to show a lot more exhaustion as well. I'm personally seeing a lot more buyers in whales liquidate positions from these higher time frame highs, more short orders starting to enter the market, dollar domination taking over, and a lot of potential that even if we get some aggressive pullback phases, if we can't trade back above 34,200, we will be making our way back down to these lows. You can see, compared to the 2008 global financial crisis, we saw a very similar extended bear market rally. What I'm about to show you here is 2008. You can see on 2008 GFC crisis and stock market crash, look at the daily chart in the same sequence of events that occurred. Very strong support area that gets created there with bullish structure, but you double top, you start to shift into bearish structure. You have one more extended, larger optimistic bear market rally, fake optimism, and gives whales a chance to exit positions from a better point until you revisit these lows and continue even lower. This sequence of events is very similar to the economic climate and situation we're bringing to the table right now when you're looking at, I'd even change the drawing on the chart and you can see what I'm talking about here when you're looking at now, right? So very similar to the dot-com era crash, very similar to 2008 GFC. This was just an extended fake optimistic rally for buyers to squeeze out what they can, trap a lot of buy-side liquidity, fool the public that the market bottom is in, gives better price points for the whales to offload positions and liquidate positions. I saw like members of the Walton family, the Walmart obviously billionaire family, offloading hundreds of millions of shares right before the weekend closed last week here as well. where if we don't break back above here, maybe Jerome Powell at Jackson Hole might give us one more squeeze and try to save the markets. But as long as we're holding below 34K and starting to trade back below 33K, we have a lot of potential to continue back into these lows. When I'm looking at the intraday time frames, we can see a few things in focus. One, starting to break this intraday bullish structure, starting to create bearish structure as well. Two, reactions at previous key zones we were observing to the left, where we have key price points of interest here across the board. For me, even pullbacks to 32 or 33,400 on the intraday time frame, still very bearish. Breaks below 33K, safer sells on US 30. So when I'm bringing that information together to the table here, I only play JMC. You ever heard of JMC? Jeev Market Concepts. Has helped hundreds of traders profit in the markets, has helped me profit in the markets, helps thousands of traders around the world understand what's going on with the combination of fundamentals and technicals. But I'd personally be looking for retests of 33,200, 32.4, or breaks below 33K, sells on US 30 stock market index. Similar type of market structure, price action analysis on NASDAQ, and of course S&P 500. Now, GJ, last but not least. GJ has been in this tug of war where individually the Japanese yen is still very bearish as the Bank of Japan keeps interest rates in the negative and their unlimited bond buying program active. You would think that this would lead to continued upside on GJ as the yen individually is so bearish, revisiting its lows. But we have had weaker economic data from the UK, as well as not as many signals compared to the Federal Reserves of the Bank of England hiking rates more aggressively. So we haven't had as many Bank of England speakers come into play, and this fight and indecision between weakness in the yen and also weakness in GBP at the same time is just keeping us ranging here on the intraday timeframes. Overall, GJ higher time frames very bullish. We still have these highs to revisit. Price action and market structure is bullish, and the fundamental difference between Bank of England's rates as well as Bank of Japan's is still keeping GJ fundamentally bullish. But just on the intraday time frames, we've been relatively trapped in this range between these lows at around 160.8 and highs at around 162.8, giving us a very large intraday 200 pip range. Okay, so we have to be cautious as GJ has overall just been ranging. So we're going to keep it very, very simple with trade ideas. If we can break out of this corrective structure and have yen weakness hold more weight, I'd be looking for buys above 162, 162.2, and 162.5. Right? So right now we can see we're still holding higher time frame bullish structure just in this corrective bearish path. If we can validate exhaustion by the sellers and buyers jumping in, breaking above 162, 162.2, and 162.5, I'd be looking for buys in this area. What marked out in yellow here is a no trade zone. Safer continuation sells with very poor economic data and breaks below 161.5 and safer below 161.2. The reason why we have to mark out these trade ideas and be very objective and be smart and patient with GJ is GJ is just ranging on the higher time frames. We have this tug of war right now between GBP weakness and yen weakness, and we don't have a clear one directional sided bias. GJ buyers could easily jump back into the scene and break above this corrective structure, and we could also equally see downside as we're just ranging on the higher time frames. So unlike being a lot more sure in our dollar bullish bias or gold bears or GU and EURUSD bears, when we are unsure about a certain analysis or trade ideas, you want to be more objective and have safer trade ideas marked out. Okay? But anyways, everybody, hopefully you guys all enjoy these types of webinars, market analysis, trade ideas, educational content. We, of course, went through some review of what happened previous week and the trade ideas that we, of course, called out. The Feds will not be pivoting. The Feds will not be printing any more cash. They can't afford it due to inflation. You just look at the Feds have said that themselves. Stop spamming, Eric, you fucking retard. Just because you spam, like, it's not going to make anything any better. It's like, have some fucking control of your emotions. What's spamming going to do? There's not that many chats going on right now. I can see you. So, we went over previous market updates and the gold sells we've been playing, GU sells, EURUSD sells, UCAD buys. We went through the key fundamental events in focus, higher time frame analysis, and intraday analysis. We went through market sentiment, what economic events are in focus, and then trade ideas across the board on all these trading instruments. You can always re-watch this as you wish. Please make sure to watch other educational webinars on the YouTube channel. You have a free news Twitter that posted 40,000 headlines actively. You have the Capital Hungry free Telegram, which has been posting analysis, my trades, and information since 2019 from penny lots to where I am now. You have the Capital Hungry YouTube page with hundreds of free webinars on educational content from fundamentals, technicals, and psychology. You have the Capital Hungry private channel, which is the next level. And if you have low IQ, if you have low attention span, if you're still a part of the general retard masses, don't join the private channel yet. Don't pay for the Capital Hungry private content. Just try to increase your IQ a little bit before. All right? This is going to be available for everyone to rewatch as they wish, learn as much as you want, and I'm going to see all of you later. I might do a trading stream on Thursday or do more guest appearances on Raj's stream, but I have a lot of appointments where I'm busy this week. Everybody take care. Have a great day. Trade smart. And I love all of you hyenas and Capital Hungry supporters. Make sure you use all your resources to your advantage. Don't be a weak, victim, pitiful little bitch. Be a strong, masculine, warrior spirit, fire in your heart beast. Because all of you can be that way. All right?